Hello, I'm with Ronald Peter Stuffley, the portfolio manager at Incrementum and author of the In Gold We Trust report. Ronnie, good to see you.
Thanks for having me.
Look, I think this is a really interesting time to be talking to people like yourself. Obviously, we had Grant on, we had Mark on yesterday as well. With the election last week, I think people are now somewhat, not confused, but you sort of got to a point in this bull market where people need to take time and really understand what this means and have a bit of a reflection. I understand you had a presentation yesterday and you called it halftime on the gold price or on the gold story. What did you mean by that?
Well, it was actually a summary of our 2024 report, which was called the New Gold Playbook. So we described the fact, or we tried to explain why the price of gold is rising and making new all-time highs, even though we're seeing rising real rates. And real rates used to be rising real rates used to be the biggest enemy of the gold price. Then we only see very, very slow gold ETF demand from the Western world. So we kind of tried to explain in my keynote yesterday what has actually changed in the gold market. And I would say it's first of all central bank demand, which is now roughly 30% of annual gold production, so it's really significant. And this central bank demand is primarily from emerging markets. The second part is obviously the fact that bonds, government bonds, at least from our point of view, aren't the anti-fragile foundation of a portfolio anymore. So we're seeing a positive correlation between bonds and equities now. So this has completely reversed over the last couple of quarters. And the third thing is that, again, from emerging markets, the physical demand of private individuals for jewelry, but also for investment purposes, is now really, that's like the marginal buyer. So as Louis Vicente Garf said, gold is basically a low beta emerging market proxy. So I think we here in the Western world, we tend to overestimate what's going on in the US, in Europe, and so on. And therefore, I would think that now with this pretty brutal reversal that we've seen in the gold price over the last couple of days, I think it's just the market. The market was searching for a reason to take gold actually down, because let's face it, 1 year ago the price of gold was $700 lower.
Yeah.
So that was a massive move for a large asset class like gold actually. So I think it's just normal, it's just healthy that we're seeing a correction now, and the fact that so many people really get nervous, even though it's still only a minor correction. From a contrarian point of view, that makes me already pretty confident, because that's not the kind of behavior that you usually see at the end of a big trend.
Interesting. Okay. So how does this play out in your view over the next couple of years? Do you think Trump coming into power last week? Obviously, we saw a strengthening on the dollar. We saw gold prices come down. We saw Bitcoin go up. Obviously, Bitcoin was a bit of a different one, because I think there's now a bit more positivity around digital assets that were voiced by that administration. But are there any ramifications, do you think, on the election going the way it did, compared to if it went the other way?
Well, I would say if we have a look at the first time that Donald Trump was elected, I can remember it really well, because gold was up big time, and we had a big gold position in one of our funds back then. And then we saw a massive reversal when the market realized that actually it's going to be a red sweep. And the weeks after the election were brutal for gold, and there was actually the very bottom of this huge corrective phase, and we traded down to almost $1,000 US. And I think for when Trump was actually in January being inaugurated, price of gold was trading at like 1,180, and at the end of his term, gold was trading close to $2,000 US. So I would say that his first term was pretty positive for gold, and obviously a gentleman that calls himself the king of debt. I would say that should provide some positive environment for the price of gold. Now, what is the big question mark, obviously, is I think that the war premium that is in the gold price,
Yeah.
this is a little bit being less discounted in the gold price now. And I don't know if Trump can really end the Ukraine war in one day, if he will be able to to deal and to solve all the problems that we're having in the Middle East. Yeah, I think it's somewhat naive, but then on the other hand, I would say for his first term, from a geopolitical point of view, we saw some pretty big achievements. Yeah?
Yeah.
So I wouldn't rule that out, that actually it will be a more peaceful couple of years going forward.
Yeah.
And I think this is what the market is seeing at the moment. But coming back to gold, I think that Trump wants, and he's very vocal about that, he wants the renaissance of manufacturing in the United States, and he wants a weak dollar. He needs a weak dollar. Can he really achieve that? That's a big question, but I think that could ultimately be the main driver for gold going forward over the next couple of quarters.
Interesting. And why do you think he needs a weak dollar, and how do you think he's going to go about achieving a weak dollar?
Well, if he wants to bring manufacturing back to the United States, I think with the strength of the US dollar that we're seeing now, I think US products won't really be very competitive. Just travel to the United States. It's like I'm traveling quite a lot, but the US is super expensive at the moment, and
Yeah.
I think that's he wants to significantly weaken the US dollar. Now, what can he do? He can first of all put some pressure on the Federal Reserve. He already did that. I think he once said Jay Powell is like a golfer who cannot cannot how do you say make the
Can't
putt,
make the putt.
the putt, yeah. Then I think he once said it was his worst decision to nominate Jay Powell. But then on the other hand, Jay Powell now said he won't step down
Yeah, he said,
earlier.
you can't find me.
Exactly. So I'm not sure about that. The second thing is, of course, kind of a financial repression. He can do like trade agreements that will try to weaken the US dollar. But I think that he can achieve that, but it's not that easy. And against what currency do you want to devalue, actually?
Yeah, good point.
Against the euro, against the Japanese yen, against hard assets,
Yeah.
like gold and commodities, probably. But we're clearly seeing this race to the bottom, and I always show a chart, or it's like a table of the performance of gold in various currencies. And I mean, gold is up 30% year to date in dollar terms. I think it's 32% in euro terms. It's up 40% in Japanese yen terms. But then you could also reverse your perspective and say it's actually not the price of gold rising, but it's the purchasing power of those currencies measured in gold that is actually falling at a pretty rapid pace. And I don't really see a big reversal of that trend going forward.
Interesting. Obviously, with the weaker dollar, so you're assuming that with a weaker dollar, obviously they'll be able to export more and grow their economy through that. Obviously, the US, I think one of the main things it's got going for it, arguably, is that they actually have a consumer base that's pretty. I mean, demographically, it's pretty good compared to the rest of the world, right? They don't have this declining population problem that most of Europe has, right? And they still do have a massive consumer power within the US itself. Does that somewhat mitigate the need for a weaker dollar, do you think?
To some degree, yes, but I think that's really one of the central messages of Donald Trump, but also J.D. Vance. He said, he wants to bring all those jobs back to, U.S. manufacturing, the whole Rust Belt, with all those problems. And I read J.D. Vance's book, the Hillbilly Elegy, and I thought it was an interesting book. So that was really like one of his core promises, to bring those manufacturing jobs back to the United States. Can he achieve that? I don't know. I mean, I think it's pretty interesting who's lining up in the team. Like gentlemen like Ron Paul, who's obviously for
Yeah.
for Austrian economics, he's like,
Puts a smile on your face. It's,
yeah, definitely. And then you've got Elon Musk saying, he can easily cut like 2 trillion.
Yeah.
And I know that Musk is a highly controversial person, but with his entrepreneurial achievements over the last couple of years in highly competitive industries like the automotive industry, and then also
Well, look at X cutting that 80%. It's
exactly, yeah.
Not like he hasn't done it
and then
before,
also
right?
in, how do you say, in
SpaceX as well.
SpaceX, yeah. So that's, I mean, nobody knows, yeah. I
Yeah.
think there's too much hope being priced in, definitely, because he cannot solve all the problems that we have in the world. But it's not gonna be boring. Let's put it that way. And I think that most of the people compare him to traditional politicians and diplomats.
Yeah.
But he's a deal maker,
Yeah.
and he wants to make deals. He wants to make big deals, and he wants to make the US to profit from those deals, and perhaps also Donald Trump and his family to profit from those deals.
You said that he's one of the only presidents to come in that his net worth didn't go up whilst he was in the office.
Is that true?
I think so. Yeah.
Okay.
Yeah. Fact check me on that, but I'm pretty sure that's true. And I think he's one of the only ones that didn't take a salary as well.
Yes.
While saying right. So, I wanted to go back to something that you said earlier, because I think it's so up in the air what the world will look like, even in a month's time, let alone in 4 years' time. Right? It's still so early. But you mentioned something which is the fear price that's factored into gold. How much do you think that is at the moment in terms of the current pricing? Because it's something I've heard from a few different fund managers as well, this fear price that's factored in due to war.
It's hard to put a number on that. I would say it's $200 to $300,
Yeah.
something like that. I mean, we crunched the numbers and always said, geopolitical crises shouldn't be the reason to actually buy gold. They have most of the time a rather short-term impact on the price of gold. There's also other examples, like end of the last big bull market, January 1980. Of course, this was massively driven by geopolitical risks in Iran. But I would say your motivation to buy gold should never be hope for more war and escalation and
Yeah, no,
geopolitical
agreed.
things are happening. I think that gold actually, and this is kind of something, Peter, that I'm experiencing now. This big divergence between the gold affinity in emerging markets versus the Western world. So this bull market was primarily being driven by central bank
Yeah.
demand from emerging markets, but also from private demand. And then on the other hand, you've got Western financial investors that completely miss the party. So they see, there's the big gold party, and they're just standing outside, and they're somewhat hesitant to go in at a higher admission price, or to just stay out. Now the big question is, will they have the guts to actually buy into that correction, or will they be very pro-cyclical like usually? And I would say that the return of Western financial investors could be one of the main drivers for gold going forward. And we've seen some modest inflows into the gold ETFs, but nothing big. It's not that like everybody's going crazy on gold
Yeah.
in the Western world.
Yeah.
And I showed a chart, for example, where we had the median forecast by all the Bloomberg and all the analysts questioned by Bloomberg with their forecasts. And the consensus is extremely negative on gold still. So this is
Yeah.
not the typical behavior that you see at the end of a big secular bull market. And that makes me confident. So the return of the Western investor, continued demand from emerging market central banks, and then probably also weakness of the US dollar and the return of inflation, the next wave of inflation. I think that could be those could be the main triggers going forward. And who knows? I mean, with the U.S. debt situation, perhaps. I mean, you're British. Perhaps we'll see a a Liz Truss moment in the U.S. bond market. Yeah, who knows? I remember that those couple of days very well. I was in London attending a financial markets history course that Russell Napier did, and it was pure chaos. So, and if you have a look at the auctions in the United States, the Treasury auctions, I would think that the market is really concerned regarding the U.S. debt situation.
Yeah, it's something I was speaking about yesterday. Actually, is that there's this concept of inflate your way out of debt, right? When does that actually start to happen? You hear this concept, inflate your way out of debt, but the debt pile, even though we have massive inflation, the debt pile seems to be going up with it.
Yeah. Well, I mean, it depends how you measure it. In absolute terms, obviously, it's going up, and the U.S. had just in August of this year, I think a budget deficit of 360 billion. Yeah, that used to be the annual deficit. Now it's the monthly deficit. In terms of GDP, in some countries it's actually falling, but we wrote about inflating your debt away, I think 2 years ago in Goldman Trust report, and said actually it's not that easy, because obviously you've got this price wages spiral, and there's so many costs, so many expenses that are just based on inflation. So with some sort of a time lag, actually those costs are catching up to inflation. So you need surprise inflation, and that should be pretty significant. Yeah. So we kind of had that. But then on the other hand, you can also see that it creates lots of social problems. Yeah. So inflation is like one of the worst taxes, obviously, and you can see with election results, not only in the US but all over the world, that this really is the decisive factor for voters.
Well, even just in the UK, for example, you sort of had that knock-on. You have a doubling effect of we're now the most taxed as a country we've ever been in our history, and you also have the inflation on top of it, right? So it's absolutely crippling. It seems like for whatever reason that isn't quite understood within Whitehall or Westminster, that increasing taxes during this inflationary period is actually going to be a lot harder on people rather than...
Of course. Absolutely. So I mean, therefore I think it's super interesting what Donald Trump might have in mind, but I'm when let's put it that way, I mean, slashing like 2 trillion in the budget, of course, that has consequences, and we're seeing that for the United States just this year, and that's the very first time in decades that actually interest expenses are a higher position than actually costs for defense. And this gap will continue to rise, and I think Neil Ferguson, he called it Ferguson's Law, and he said that all great empires that actually had interest rates or interest expenses surpassing defense. Actually, that was a sign for the end or coming to an end of those empires, and we had it with the Spanish Habsburg Empire. He had it with the Ottoman Empire, and I also think with the British Empire. So those are just facts that cannot be talked away by Donald Trump.
The difference with those empires, though, is they didn't have fiat currency, right?
That's true. That's a good point. Yeah, but then on the other hand, what did we usually see when a new war started? We went off the gold standard.
Yeah, exactly.
Temporarily. I mean, I think something that makes me very confident, Peter, is the fact that now talking about sound money and the consequences of inflation, this has really become much more mainstream than, let's say, like 3 or 4 years ago, and I think that's also due to so many young people coming into into those topics through Bitcoin. You
Yeah.
know, learning about Austrian economics, learning about free markets, learning about sound money and the consequences of inflation. I think that makes me pretty confident actually. And I realize that many in the gold community hate Bitcoin, and it's the other way around as well.
For whatever reason, yeah.
You know, we've got two funds that actually combine gold and Bitcoin, and it works perfectly
That's
well.
smart, yeah. That's,
So
but it's funny because I think either side believe that the other is taking away money that could be going into their pot. I think, especially on the gold side,
Yeah.
There's so many arguments to say, oh, well, if everyone wasn't putting all their money into Bitcoin,
Yeah.
gold would be at 5,000 or wherever.
yeah, but I mean, I'm a free markets guy, and I think that competition is a
Freedom
good
of
thing.
choice. Yeah.
So if Bitcoin is being, you know, marketed better, then I think the gold industry should do better and
True.
make a better and a more positive
Yeah.
case for gold. And this is actually what we also tried to do. We had a chapter about the marketing problem of gold in our last In Gold We Trust report. I think there's the narrative that, you know, gold is useless, especially compared to green and strategic metals or critical minerals. There's the narrative that gold is only for, you know, Donald Trump voting preppers. So it's a very right-wing thing. And I think there's you have to deliver the facts and the data, and not you know, sell gold like a cult or like a religion. It's just, you know, it's a very hard currency that has a pretty good track record. That's what it is. Yeah.
But you're right. There's no hodl movement in gold, is there? There's no there's no Reddit threads saying. Yeah, it's true. Maybe we need to make one. I guess looping back to the overall thematic, though, I think you said something quite interesting earlier, which was you were looking at obviously central banks buying about 30% of gold. That's the emerging markets. That's still happening. Do you see any? So I think a lot of the reason why people put down the central banks, because you saw this big increase in spending, was obviously when Russia got kicked out of SWIFT and froze assets and whatnot. And obviously we spoke about this with Grant yesterday. And do you think if there was a conflict, the conflict was to be resolved in the Middle East, would that put people at ease more? Or is it the fact that it's out of the bag now, that can happen, that central... I guess the point I'm trying to make is, at what point do the emerging market central bank decide, okay, we've got enough gold, or maybe we can start being a bit more risky and putting in other things and start being a bit more confident on the stability of the world right now?
Well, that's interesting that in the Western world, central banks don't enjoy talking about gold, but still it's one of their primary reserve assets.
Yeah.
Now, if we compare it to emerging markets, they've got significantly lower allocations to gold. They've got, usually they tend to have much higher dollar exposure and treasury exposure, but this has reversed, and I made the analogy of a heel turn from the world of professional wrestling, where the bad guy becomes the good guy.
Yeah.
And I think this is happening, and still emerging markets have a very low allocation to gold. The World Bank came out with a report suggesting that emerging markets should hold up to 22% of their total reserves in physical gold. We are far away from that. And I think that, you know, if you're traveling to Dubai, if you're traveling to Turkey, de-dollarization is not like a topic that you only read on Zero Hedge or on Twitter about. It's just everybody is talking about that. And I think that emerging markets countries now actually are really, they have the self-confidence, and they say, okay, we don't want to play by the rules that we haven't actually written. We want to be taken seriously.
Yeah.
We want to have our vote. We want to have our voice on the table. And you know, if you have a look at the last BRICS summit, so many people in the gold community expected, you know, the new gold-backed BRICS currency.
Yeah.
Many people said it was a nothing burger, but then on the other hand, if you read the declaration, I think it said reforming the international financial architecture not once, but actually 4 times.
Yeah.
And Putin said that it's not time yet for a new BRICS currency that could be commodity backed. Not yet, he said.
Well,
so,
I think-
so I think that's it's clearly going into that direction that BRICS are becoming more self-confident. Does gold play the central role in that? I don't think so, but it plays an important role. But it's just, they just realized, well, actually, we are where the growth is. We've got, in general, better demographics. We've got, higher savings rates, and historically, gold always went into into countries where the economy was actually doing well and buzzing, and where we had high savings rates, and yeah. So this is the big trend, and I don't think I kind of doubt that Donald Trump will completely reverse that development.
I think it's funny with obviously Putin saying that it's not time yet. I think he doesn't. I read that as let's not poke the bear because we need to get this war concluded before we poke the bear again. Obviously, if he comes out with a gold-backed currency, the idea that US would then be the arbiter between a peace agreement would probably not be the case. I'd imagine they'd go fully funding Ukraine for as long as they need. That's my own personal opinion anyway. Look, just I guess from your point of view then, it sounds like you're still pretty bullish on the gold space, and it's really, would it be right of me to assume we're not going to see any reduction in central banks, especially on the eastern side, or outside of the West, buying gold? You don't think the debt problem is going to be solved, and you think the US dollar is going to weaken, therefore all the ingredients are really bubbling up for...
Yeah, I would say, to be honest, I'm not super bullish over the next couple of weeks.
No.
I think that we'll see over the next couple of weeks, perhaps even month or quarters, pretty choppy trading. I would say that gold will have to find like a new equilibrium where it's kind of stabilizing at the price level. But again, I think that's fairly normal, because 1 year ago the price of gold was trading at 1950, so that was a major move. I think this breakout from this big consolidation pattern, that's legit. And our price target based on our gold valuation model that we put out in 2020 was $4,800 by the end of this decade. So if we're gonna stay on that track, and 4,800 sounds like crazy, but it's a 9.4% CAGR, which is, from my point of view, that's definitely possible. So if we stay on that track, we would see 2,665 by the end of this year. Okay. Of course, it's a model, but I think that the model works perfectly well. And therefore, I would say, don't expect too much from gold over the next couple of weeks. We have to digest this major move. I would say that the political developments in the United States, and now this is like for Donald Trump, he can say whatever he wants now, yeah.
Yeah, true.
So until January, yeah. So I expect some crazy announcements, yeah. But then we'll see reality coming back, and it's again, I think people are sometimes a little bit naive to think that he's the savior and that he can solve all the problems that we have. But again, I mean, from my point of view, gold is not a religion. Everybody should own gold. We made a special report on the optimal portfolio allocation. We said between 14 to 18%. That should be the typical the perfect allocation to gold. If I say that in the Western world, especially at like generalist investors conferences, people say you're crazy, that's way too high. If I say that at a speech in Turkey or in Dubai, people would say you're crazy, this is way too low. So that also confirms this big divergence that we see, how gold is being regarded in the Western world compared to how it's being regarded in emerging markets.
Yeah, good. Look, just as a final question, I guess it's when you say this breakdown of gold, 14-18%. What are you talking about there? Gold physical, gold ETFs, gold equities. How are you breaking that up?
So that was a very interesting chapter in this year's In Gold with Trust report, where we said for the scenarios that we have in mind, with higher inflation, structurally higher inflation volatility, we're coming up with a new 60-40 portfolio where we say, okay, you should still own equities. Absolutely, I think that gold isn't the enemy of equities, but I think the bond allocation, especially when it comes to sovereign debt, should be significantly lower than 40% in the traditional 60-40 portfolio. So we say 15% physical gold, and this is the so-called safe haven gold. So this is like an insurance policy. This is something that you ideally give your kids or grandkids, where you shouldn't follow daily price fluctuations, no counterparty risk, safe storage. But then we also advise 10% commodities, 5% Bitcoin, and 10% performance gold. And performance gold, that's for example gold and silver mining equities, where we've got our signal, which is the active aurum signal, that is basically telling us when to play more offensive and when to play more defensive. And if we want to make the comparison with football, so soccer for our American viewers, you cannot play extremely defensive all the time.
No.
I mean, as an Italian, the Italians can.
Unless you're Liverpool back in 2021, where you had Salah on the wing and you could counter-attack, and you could just have a couple of guys running forward every now and then.
Yeah, but then you still had strikers.
Well, you can't park the bus, as we say.
Exactly. Only the Italians can. But there's times when your team has momentum. Everything just works. And then you're just having a hard time. And I think our conviction is that mining equities are the most top-down asset class. You really have to time them very, very actively. And this is what we're doing with our signals. So this is telling us when to be more offensive and when to be more defensive. And now since December of last year, we still have the green lights. So we're basically fully allocated in the gold and silver mining space. Of course, we've seen some drawdowns recently, but still, I think the secular trend in the mining space is up. And even though the price of gold is down like $150, $200 over the last couple of days, the margins of the large producers, the majority of them, there's still some companies that completely will screw it up, even at those gold prices. The margins are terrific. So therefore, I think that there's actually a strong value investing case for many gold miners at the moment.
Mostly producers, mid-tier producers, majors. Okay. Look, we could get maybe a topic for another discussion, because we've been chatting for a while, but would love to get you back on to talk about the junior space at some point as well, and
Absolutely.
see how things transpire. But no, Ronnie, thank you very much.
Thank you very much.